the price of Bitcoin getting close to 29,000, breaking 29,000 in the past 24 hours. And as we discussed, it was in part because of the ETFs. But we also have Fed Chair Jerome Powell is going to speak today in front of Congress, and his notes have come out. So let's talk a little bit more about what he's going to say, because we can predict it, in part because Powell's already released it. Joining us now to discuss is eToro U.S. investment analyst Callie Cox. Welcome, Callie.
Hey there. Excited to chat about Jay Powell. I feel like he's been dominating my job lately, quite frankly.
Yeah, he's finding relevance. People say the guy doesn't have credibility, and we'll get to that. But because he's saying, hey, I'm going to raise rates. We're going to raise rates here. Don't be surprised. We just said we're going to raise rates. And now he's in front of Congress saying, we're going to raise rates. And it seems like at least the stock market didn't believe it. The bond market was kind of like, yeah, he might. It seems like he's going to do it. But it seems like some people are really taken by surprise about this. What's that about? I mean, he said he's going to do it, yet they still can't believe it.
Right. Well, it's hard because we have all these mixed signals coming from the Fed, and the Fed's main line is that they're data dependent. So Jay can say that they're going to or planning to, raise rates in July or possibly eyeing it, but he can't say for sure what's going to happen because we haven't seen that full slate of data. So I think that's where markets are getting tripped up here. The Fed's not going to come out and say exactly what they're going to do, even though they might give hints to where they're leaning. And let's be honest, the job with inflation is not nearly done yet, even though inflation has made some good progress. So we look at it, we see Jay having a case for, potentially hiking one or two more times, but more importantly, keeping rates higher for a while, which could be really tough for, certain crypto protocols and coins.
Yeah, but at this, when you say that the market's confused, isn't it sort of that he gave the market, he's like, look, guys, I'm going to give you a breather because you haven't gotten a clue yet. I mean, it seems that the issue with these regional banks was basically, and we're seeing the headlines now also too that a lot of the private equity also kind of is messing this up. That they seem to be caught off guard because I'm going to be quite frank, and I don't want to put down a whole generation, but these kids. And they're, music and whatever, but they also go in and they've never experienced high interest rates. They've never seen rates go up. I mean, you're talking about generations of people who have never seen rates go up at a significant level. They don't remember, they don't know who Paul Volcker is other than the Volcker Rule, if they even know what that is. And this is sort of like, you think that the Fed is sort of saying, guys, we're going to hold off on this a little bit. You go clean up your books here before we raise rates again, because this is not going to look good for you. If we don't want you to blow up the financial system. We're going to give you a couple of months here to, clean out your bond portfolios, shorten your duration if you kids even know how to do that. So do you think that that's sort of like what, and it just seems like the market doesn't quite get it yet, that he's sort of giving us some time to clean up?
So I think when you try to consider the timing of this pause or the skip or whatever you want to call it, I think you have to really weigh two things here. Obviously, there's a lot of stress on the system at the moment. I mean, you said it yourself. We saw some banking issues back in March, which seem to have largely resolved themselves, but are systemic issues ever resolved? I don't think you can say that. And then, we have these, problems popping up in commercial real estate and private equity, which aren't systemic issues, but, cracks can spread quickly. And in the background of all of that, Jay Powell knows that these interest rate hikes operate with a lag. So the Fed still doesn't know how much pressure they've put on the system, and they need to slow down the pace of hikes to wait and see what could break, which I think is prudent. And, by the way, the mention of generations and, a whole new generation of Wall Street that's going through these interest rate hikes, I think it's certainly valid. But you also have to remember that a lot of these investors, especially younger investors, were around during the great financial crisis and, are dealing with the regulations that come out of that. So it's not like they've had a cakewalk over the past decade. They felt it too. It was just at a different age.
They just don't know how to do a bond portfolio.
I don't quite agree with that, But, we're all learning too.
Yeah.
We spoke about the BlackRock ETF at the top of the show. I know that you've said that this is a sign that institutional interest has not left crypto. What's your outlook on Bitcoin? What's your outlook on the markets given this news and given the institutional interest?
Yeah, so I think crypto is going through a crisis of confidence right now. It's pretty easy to say at the moment. And this news of this Russian filings for spot Bitcoin ETFs has certainly put some excitement back into the markets, especially in the more well-known quality coins like Bitcoin and Ethereum. And I think it's valid. I mean, institutional money is where this industry grows, whether you like it or not. That's the history for many young emerging markets. And, the fact that some of the largest issuers in the world are stepping in and saying, we want to offer this product, I think tells you something about pent-up demand, or that demand from investors who might not be comfortable trading spot crypto or want to trade spot crypto, but in certain accounts. So I definitely think it's a positive sign. I think the market is taking it that way. And it shows me that, Wall Street still believes in certain parts of crypto, and that it's not like the price of Bitcoin is going to zero. It's, we need to understand what the value is right now, but there is value.
And if you had to take the price of Bitcoin and now compare that to the S&P 500, I know you've done some analysis there. Tell us what's happening, kind of unpack the differences.
Yeah, so this is interesting, Jennifer. I mean, we talk so much about Bitcoin's identity. What is it? Is it a risky asset? Is it an inflation hedge? Is it a safe haven? I find it interesting that the stock market has gone on a 5-week run, and Bitcoin just hasn't joined in. And I think that there are a lot of theories you could throw out on that, but one that I'm seeing is the fact that Bitcoin rallied during the banking issues in March, and investors saw it as a safe haven. So investors could potentially be in that same camp where they see it again as a safe haven, and they're kind of chasing what's working right now. And unfortunately, it's not crypto. And again, it's not just black and white. Like, you have to think of all the context that's going on. And like I said, crypto is going through a crisis of confidence right now. But the fact that it's decoupling from stocks at this moment tells us a lot about the identity, and it's more multifaceted than just this risk asset that everybody's chalking it up to.
Rates are going up in England tomorrow. What do you think? How far is it going to go? What do you think?
Good question.
50 basis points, 25 basis points? Does it matter to crypto?
Well, interest rates in general matter to crypto. Interest rates around the world matter to crypto because everything around the globe is interconnected. When I talk about the Bank of England, I mean, England is struggling with its own set of, more supply side growth issues that could be creeping into the demand side right now. But, I think with central banks around the world, the real struggle here is how to correlate between each other. And, we see a hike at one and we see another pause. And of course, these economies are in different spots at the moment. But, I think the Bank of England is going to feel a lot of pressure to maybe back down from what people are expecting. I'm not totally sure. And they could go out there and gut out a rate hike. But, at the same time, they have to consider the fact that the Fed is pausing and that the ECB is thinking twice about raising rates.
Callie, thank you.
Surprise.
Thank you very much for joining us this morning.
Yeah, thanks for having me.
That was eToro US investment analyst Callie Cox.